Finance. So boring. Let's talk more about it. You're still here, which means you're interested in what I'm saying. Or not. Either way, just listen to me for the next couple of minutes, and then you can go back to your cat videos. This video is essentially going to make you an investing pro. You're welcome. In advance. After the initial video, I'm hoping you understand the gist of why you should start investing and why you should start investing today. What should I invest in? And how should I invest? There are essentially 3 types of investment products that you need to know about. There are more, but to keep things simple, let's focus on these 3. Funds, bonds, and stocks. Funds, or mutual funds, are essentially just built up of these other 2 products. They allow you to essentially invest in a basket of bonds and equities. Just a basket of products. The stock market is a place where companies of all sorts sell tiny pieces of themselves to do all sorts of things, whether it's expand into new geographies, work on new products and services, hire new people, essentially anything to help the business grow. Anyone, you, me, can buy those little pieces of the company that they're putting on the market. So when the company makes money, you make money because you own that tiny piece of it. The price and the value of each stock is determined by the buyers and sellers in the market. So that's why when there's good news about the company, more people want to buy those little pieces of the company, and that's why the stock price goes up. When bad news happens, people want to sell their pieces of the company, and that's why the stock price usually goes down. Bonds are similar in a sense that their market price goes up and down based on demand. The difference, however, between a stock and a bond is that with a stock, you actually own a little piece of that company. So as I mentioned before, when the company performs well, you perform well. A bond is essentially you giving a loan to a company for a defined period of time. Me giving a loan to a company? Don't companies have enough money already? Well, yes, they do. But companies always need more money to expand and a bunch of other things. But you're right to think this way because an investment directly into a bond has a minimum investment of $200,000 US. That's a lot of moolah. So that's why funds offer an alternative means of accessing these bonds, where the people in charge of the funds will actually do the purchase of the bonds, and you as an investor can buy a tiny piece of that basket. You remember the basket from before, right? And there are many funds out there with a minimum investment of 1,000 Sing dollars. So that's a little bit more palatable. With stocks, you can start with as little as 1 Sing dollar. Whether you like to invest in stocks, funds, or bonds, the next stage for you is to do a little bit of Googling, where you'll find loads of step-by-step guides on how to get you started on your investing journey. And that's as complicated as we'll get today. With this alone, you're already on your way to becoming an investment professional. So that's it. Go forth and invest, my children.